the interim finance minister Piyush Goyal, who met with the PSU bank chiefs just last week on Friday, and there is a talk of an NPA cleanup which is in place. So let's chat a little bit more about this with B. Sriram, the MD Corporate and Global Banking at SBI. He joins us on the show right now. Mr. Sriram, morning. Tell us about the key takeaways from the meeting with interim finance minister Piyush Goyal. Is a bad bank, ARC, AMC, the best way to resolve stressed assets for PSU banks, according to you?
Actually, the meeting focused on two broad areas, in the sense that earlier, we used to have banks, meeting on specific issues and maybe on specific accounts. But this was probably the first time that we as bankers, sat and discussed two or three things which were on a general nature. One is, of course, how to try and improve the credit flow, and that also on the back of a risk mitigated sort of environment. And the second is, of course, how to create banks of scale in an environment where the economy is growing at a very high clip, and also for the future, how to build the risk and the scale for Indian banks. So these were some of the things, but also as part of as our discussions, some of the ideas that came was in terms of trying to see as to how best we can, on the back of whatever we have learned, how best we can progress resolutions at a slightly more innovative level or at a faster pace. So these were things that we discussed, and I think most of it, the Honorable Finance Minister had also addressed the press conference and given the background of all that. As far as the AMC, ARC, or the structure that is concerned, we thought it would be advisable for us to set up a committee of senior experienced bankers to try and look at it. There are three things, objectives on that. One is, of course, that the decision making in respect of a resolution that we can take forward today needs to be ratified by a large number of banks. So is it possible for us to look at a structure where that decision making becomes much more faster? The second is a lot of bandwidth and quality time of senior executives across banks is now spent on these decisions and on these resolutions. So is there a way in which again this time or this bandwidth can be released for the top executives to focus more on sales, on marketing, on credit flow, on other factors that need to be addressed, rather than focusing a large number of time on all these on the resolution matter, which is of course very important. So these were the two prime considerations that we thought the committee can look at, and what could be the modalities of it, and so on and so forth. The committee has a very short time frame of a couple of weeks to come and discuss a sort of a plan, and then obviously the banks will sit together and start to discuss that and probably take it forward.
So help us understand, how will this actually materialize? Because BOB's Mr. Jayakumar is likely to strategize takeover of good loans for banks under PCA. Does this really mean, Mr. Sriram, that banks under PCA may then actually diffuse as bad assets will be taken over by ARCs, AMCs, and good assets by other better banks as well, while the government has reiterated that they stand committed to support banks?
I think there is a bit of a confusion here between what we call the PCA banks and the bad loans. You see, bad loans could be in any of the banks. PCA, to my understanding, is an early warning system by the RBI based on three broad parameters of capital, profitability, and non-performing assets. They've tried to figure out as to which are the banks that need a little bit more hand holding, and I think there are ways and means in which these banks are put into certain risk threshold groups, and then there are certain actions that the banks would need to take in their boards themselves to try and come out of some of these weaknesses. it is likely that all the mandatory actions or discretionary actions would not be the uniform across banks. It is also likely that there are certain directions which are applicable for some banks and may not be applicable for some others. So PCA is something that is a corrective action that needs to be taken as soon as there is a perceived weakness by the regulator, and that is where it goes. But as far as bad loans concerned, irrespective of whether the bad loan is in a PCA bank or in a non-PCA bank, I think the import of the committee is to see as to how that asset needs to be resolved, and how is the best way in which the time that is taken by every bank, irrespective of what state they are in, the time taken towards resolution is reduced, and quality time taken for and released for other businesses.
Okay, fair points. I wanted to chat a little bit about SBI in particular as well, Mr. Sriram, because you have already hiked the MCLR by 30 basis points so far. By how much do you see hiking further deposit rates and MCLR, and what thereby then would be the margin impact?
I think the market is already, if you see the GSEC yields, the market had already factored in a 25 basis points increase, which came the recent policy of the RBI, and thereby I think to some extent there could be stability regarding both the interest rates as well as the bank loan rates, lending rates. I feel that at least for the foreseeable future, we are looking at a lending rate which has sort of hit the or bottomed out in some way, or at those levels where we are currently seeing them. I don't see another rate hike, at least in the next couple of quarters.
Okay. What are your own capital requirements for FY19? How much of additional government capital infusion are you expecting, and how much would you raise yourself via asset sale of subsidiaries as well as from the capital markets?
Today we are actually comfortable on the capital front, and I think as far as our results for last year is concerned, we are pretty well capitalized. We don't have any immediate need for raising capital, but as we have stated in our annual results earnings call as well, there are a few non-core businesses that we are looking at. There is no clear timeline at the moment in all of these. I think we are just considering and looking at them, but I think at the opportune time we will look at how much more is required. Today we are also looking at we have also factored in a credit growth of around 10%, and that has been put in our calculations as well. So as far as capital is concerned, we are quite comfortable at the moment, and we'll see as we go along into the year as to whether it's required and in what form we will be able to raise them.
Wanted to understand a little bit more about consolidation in the industry, because the government, as we understand, has left the decision to banks to decide on consolidation. However, majority of PSU banks are weak, and merging them with better PSU banks may further risk better off PSU banks. What is your view on this impending mega consolidation that is waiting in the pipeline?
What we found was this, in the back of the experience that we had on the mega merger that we did of 5 associate banks and the Bharatiya Mahila Bank. What we found was, while there were a few challenges in the first couple of quarters, 6 to 8 months, the benefits of scale, the benefits of cost efficiencies, the benefits of providing the world-class products to our customers has now started to kick in, because the customers to a larger bank are some of the products that are not accessible in some of the smaller banks is now is made available to them. So the benefits that have now started to creep in, and that is what as part of our discussions the other day, we had also made a presentation to the other banks to what are the challenges and what are the benefits that has accrued. So it is up to the banks. Actually, there is, to my mind, what are the strengths that you're looking at a certain merger or otherwise. I don't think there will. What are the synergies that you can develop on? I think these are the factors the boards of the banks that are looking at mergers would need to consider before they look at a bank for an ideal pair. Whether it is weak or strong, I think that step comes later. But the first and foremost point to my mind is how much of a good pairing will some of these banks arrive at in terms of looking at certain partners. So I think that is a very crucial consideration in any merger. But yes, there is a huge advantage once you get the merger right, and once you stabilize, and once you come to this level. I'm sure there is a huge advantage not only to the bank but also to the customers at large. Today, as I was saying earlier, with the country going in excess of 7.5% growth rate and being one of the top economies of the world, still the SBI post-merger is only in around the 50th in the world ranking. So there is a scope for not only for SBI but for a few other banks to come to that scale and size to meet the demands of the growing economy and to meet the demands of being one of the largest economy of the world.
Thanks very much for joining us and giving us those insights and perspective on where the sector is headed, as also the plans that you have with SBI.